Today was quite a good day for us in the market and shows us that if we position properly, don't just focus on buying the market, but focus on what stands to benefit from the current environment, that we can generate good returns. Today was a rather muted day for the market, but for those of us with energy and mining and materials companies, and our favorite growth companies even, today was in fact a fantastic day. Let's run through it, let's see what's winning, and let's see why. The energy stocks, we've obviously talked a whole lot about the energy stocks, did very well today, and did very well despite, obviously an up day for oil, but nothing crazy. Oil is not at a 52-week high right now. However, something like Exxon actually is. So that, in my opinion, is quite bullish. Exxon has hit that 52-week high, but other areas of the energy industry haven't. Schlumberger, oilfield services seem to be lagging somewhat behind. They haven't, many of them have not touched the 52-week high yet. I expect that to occur, and for that just to be simply another milestone in the quiver. And I expect the price of energy to continue going up. We're very early in the winter months. The supply and demand dynamic seems pretty straightforward. There's no new production coming on. I believe the United States put on 6 additional rigs. There was clearly a large increase in count, and then that is clearly tapered off and seems to just not be cutting it in terms of increases. Saudi Arabia and all of OPEC, etc., has decided what their output's going to be, and they're sticking to that plan. However, supply continues to ramp up. We're seeing air travel pick up. People have purchased cars. They're going to be driving more than they were in the past. There's also been a flock to the suburbs. So there seems to be, at least medium term, an increase in demand for oil, which happens to be the largest form of broad energy that we use. And the EIA expects that to be the case or IEA expects that to be the case until 2050. You can look this up. It's an article on S&P Global. They expect oil to be the primary fuel source until 2050, and then slowly start tapering off from there as it slowly starts tapering off before that. But overall energy consumption to increase 50% between now and 2050. The overall picture is bullish for oil. A lot of these companies are trading at 10-ish trailing PEs and even lower than that forward-looking PEs. If you're going to be going until 2050 at least, there's a whole lot of money to be made, and that's not considering inflation, which is our next thing. There was a little bit of interesting behavior last week with regards to the inflation picture. We saw the Fed announce a taper that was totally expected to be announced, and then we saw bond yields fall, which is like the opposite of what should occur when the largest purchaser in the market announces they're going to decrease their purchases in that market, which is exactly what the Fed taper is. When bond yields fall, it implies more people are buying. But the biggest purchaser said they're going to buy less. We already know volumes in these assets are pretty low historically. So that means a lot, if you ask me. So that was unusual behavior. Today we're seeing that reverse, 10-year back over 1.5. I expect that to be the case. Although, Warren Buffett says don't, speculate on bond yields. So what am I doing over here speculating on bond yields, right? So I expect that to be the case, but I'm gonna stick to Warren Buffett if I can. Mining and material stocks. We had been suffering a little bit the past couple days and weeks on rumors of the steel tariffs. However, we're now getting word on the infrastructure package looks set to pass, pending a Biden signature, and it would be hard for him, in my opinion, and seemingly the market's opinion, to pass an American infrastructure bill, part of which is justified by the money staying in the United States and we can recapture it through tax revenue, etc., when you're buying foreign steel. So it seems almost certain that we're going to keep the U.S. steel tariffs on to make sure that the steel we're buying for this package is U.S. steel, to keep those jobs and keep those industries strong and healthy. So it looks like the tariff concern is going away. Excuse me. And these stocks are rallying on the infrastructure bill and possibly on the tariff concern easing. We'll see. But I believe that might be part of it. And that's at least easing it for me. So now I feel good in Cleveland Cliffs, Nucor, which I no longer have but have had. Actually flipped that position for Cleveland Cliffs. Have BHP, which is foreign, but if U.S. demand is sticking in U.S., if there's just more demand, etc. Still is a good mine. They're very well diversified in other materials as well. So looks good. MP we like. We've talked about it on this channel being a more risky mine, but higher potential metals, I would say. Rare earth metals, magnets that are going to be used in electronic vehicle engines and drones. There was a short report, Grizzly Research. I read it, most of it. I saw nothing new that I didn't know. I knew the Chinese were their biggest customer. As far as I'm concerned, the mine is on U.S. soil, and that's what matters. And it's a U.S. company trading on a U.S. exchange. The Chinese are the ones buying through the ADR if they so choose, okay? We can buy it on the NYSE. So seems good to me. That's mining materials. Now finally, growth. We have a couple growth companies we talk about on this channel. Editas, Crispr. We addressed the Editas sell-off a while ago. I thought that was actually good data if you've got a long-term view and understand that this technology is novel. And earnings, I guess, were okay. Haven't gone into that. Saw their release, saw their earnings release, and saw positive notes on their trials. Okay, I don't care about the earnings. Yes, they're losing money. They're having no trouble getting money either. So that's not an issue to me. I'm not worried about Editas going bankrupt. What I'm worried about is the trials, and I didn't see anything negative on the trials. So that's good enough for me. Stock's up 10%. We love to see it. It's taking Crispr Therapeutics up, which I have started adding to again. There's long term. That's one of my first stocks ever purchased, actually, Crispr Therapeutics. The first stock I was truly passionate about, I would say, back in 2017. And here it is, again, looking pretty cheap. Obviously, more than double the price of Editas, but about 3/4 the price of Intelia, which we also owned, which actually, Intelia used to be the cheapest of the three like a year ago. So the way I'm kind of handling this is I believe in the technology. I always want to have exposure, but the valuation is questionable to me because the two women who got the Nobel Peace Prize are involved with all three, and they want all three to succeed. So I will make my decisions based on clinical trials and valuation, weighing those two. Intelia, slight advantage over Crispr Therapeutics. Editas is a lot to catch up, but Editas is the best structure. If they could get the technology down, they have the best structure because Crispr Therapeutics and Intelia have basically licensed more of their potential away to Novartis, pharmaceutical companies, etc. Editas has as well, but significantly less so. So I'm sticking with Editas. And Crispr Therapeutics for now. If Intelia falls, I'll be more than happy to buy it, but not at this current price. So that's today. Feel free to ask questions. As for the market, I like the inflation picture. I'm sticking with that. Sticking with, energy, mining, and growth stocks I truly like. And everything else, we'll see. I'm not feeling that much else. That's really what I'm buying. Obviously, I bought a little bit of Penn National Gaming. I have other stocks that aren't in these three categories here and there, but they're very particular based on market opportunity and valuation. So if you got any questions, feel free to ask. We'll be back tomorrow. Peace out.